Welcome everybody to the October 2025 housing market update. The government is shut down today. How is that going to impact the housing market? We're going to talk about it right now. Let's jump right in. I'm going to go ahead and screen share here for you. So before we get into the government shutdown and its impact on the housing market, let's just kind of talk top level about where things are with the housing market. Currently, home buying is at its lowest level since the mid-1990s in terms of the number of transactions that are taking place. I have been saying this for months. It is a low transaction environment in the housing market. It's a tough time for buyers because there's not a lot of inventory. A big congratulations for everybody who's out there because our company is up 26% to the real estate industry. Anybody that's tied to the transaction in a declining real estate transaction market. So that's a testament to the great relationships that we build as an agency. So congrats to all of our agents. But also it impacts the broader economy because the housing market accounts for roughly 18% of GDP. So when the number of house sales are down, the whole economy is down. So what's happened alongside of the low transaction environment? Well, prices have gone up 60% since 2019. That is a remarkable increase. And they're still rising at about an average of 3.9%, call it 4% year over year. Here's another interesting point. The median home price, $427,800. That's 5 times the median income. Economists usually like to see that around 3 times to be a healthy environment. So affordability is at crisis levels right now, and it has been for some time, and it's a problem. And also something that we don't hear enough about, but insurance and property taxes. A lot of different things going on in addition to things that have happened, right? We've talked a lot about added pressure previous months on homeowners. These are things that you should know as well. So our government is shut down right now. And how is that impacting the broader, housing market, the U.S. housing market? Well, the shutdown began roughly 7 days ago, and many federal paychecks have been paused. And as a result of that, maybe those federal employees are going to have a hard time paying their mortgages. So there could be some negative impact just purely based upon the number of employees that are not able to receive checks. But I'm going to show you some broader general government numbers, both on the revenue and expense side, that are really concerning. And I don't know, I'm going to kind of bring you a macroeconomic thing here in the housing market update, but it'll be good for you to see all of that. The second thing that the shutdown is going to impact, and I think this is the real immediate urgent impact, is that there's roughly 2,500 mortgage applications each day that are tied to federal programs. And those could potentially face delays because people working in those departments may be furloughed for a point in time. So the processing, closings being deferred, if all that we are to do is to focus on things could happen short-term effects of a government shutdown and focus on, well, it's the Republicans' fault or it's the Democrats' fault. It's short-term thinking because this is going to be a continual problem unless we fix the broader problem of income and expense for the government. Okay, so I don't know what you know or don't know about federal revenue and expense, but I wanted to show you some charts here. From the federal government's own website. Okay. And what you see here is a chart on revenue. Okay. And what you'll see is that, why is that important? It's pretty much up and to the right. We spend so much time fighting with each other, Republicans and Democrats, revenue has been steadily increasing. Should we cut taxes? Well, it's only for the wealthy, this, that, the other thing. I mean, look back to the year 2000, 25 years ago, when revenue was roughly $2 trillion a year. And now it's up over 5.6. So it's more than doubled, right? And there's been Republicans and Democrats alike during that time. And there's been tax cuts and tax increases during that time, but yet revenue has gone up. So we can fight all we want about, whether or not tax cuts are actually increasing revenue or decreasing. The fact of the matter is revenue has been pretty much up and to the right for the last 25 years. The bigger issue is the expense side, which has also been way up and to the right, with a huge blip on the screen during the pandemic here. You can see that, again, look at the year 2000, right? It was roughly 2 trillion. Remember, I'm going to flip back here to year 2000. It was roughly 2 trillion. So we were at balance in the year 2000. Now, revenue right now is about 5.6. On the expense side, we're up over 7.6. We're running a $2 trillion deficit each year, and that is the problem, right? So we can talk all we want about this short-term government shutdown, but until we fix the real issues of our expenses running out of control, it's going to be a revolving door here, and we're going to have this shutdown happen all the time. And it's just never going to really end until we get our budget back.
How does all this affect
the economy? We have huge entitlements in this country, and until we get real about those things, it's just not going to come back into play. Things that can happen with processes.
How does all this affect the housing market? Well,
mortgages and
we saw on a short-term basis the things that can happen with processes being shut down because people are furloughed and it's slowing down mortgages,
housing market,
getting deals closed, so on and so forth.
Property taxes,
but the broader perspective is,
all these other
if you continue to put pressure on the housing market by, increasing property taxes, increasing insurance, all these other things, it's just going to continue to slow the housing market down, and it's going to continue to slow GDP down, and it's going to continue, to put a damper on tax revenue. So it really is the expense side of the equation that we need to be much more concerned about going forward. I hope everybody, gets behind that one way or another. I know there's a lot of different political angles to this, and I'm not taking one side or the other. I just know we need to cut costs. That's very important.
Okay, so let's now dive in to local, Orange and Sussex County data. Let's check that out. What's going on there? Okay, so new listings are actually on the rise, not in a big way, but you can see here by the red line kind of covered, you can see all these years here down in the lower level. That's like the pandemic years, right? So we're kind of still, at those lower levels of inventory, but you can see that inside of 2025, which is the red line, it's been higher several months than the previous 2 or 3 or 4 years. So inventory is slowly and surely coming back, which is great, and that needs to happen. Units sold, which is really the most important metric of all, is still kind of flat, but it is coming back a little bit. We've seen now a couple of months that are, July and September in particular, were higher than previous years. So that's a good thing. Hopefully that's what we need to happen, right? Is the number of transactions to pick up. That's the key. Now, the next thing is average sale price. You can see that prices are still kind of sailing, literally sailing. There has not been a hint of much of a decrease for some time, and 2025 has clearly been above that. There are different pressures on price happening in other areas of the country, but in the New York, New Jersey metro area, coming down anytime prices at least here locally in our area at this point in time. Days on market. Things are sitting on the market a little bit longer. You can tell from this chart, look at the red line, right? It's higher than the last few years. So pretty consistent. That's actually just about every month this year. And September was the highest to come into the market. It allows buyers of the last 4 years to negotiate things, which is a good thing, right? I don't think it's a good thing when you have such an intense market that a buyer can't, A, negotiate the price a little bit at least, B, can't do an inspection on the home. That's not a good thing. So on and so forth. So normalcy is slowly and surely coming back into the marketplace, at least here locally in the New York and New Jersey marketplace. And then sold to ask ratio. This is the last one we're going to look at. It is, still every month this year, looking at these numbers solidly for 20 so that means that it just is, this one always amazes me that homes, you basically on average have to pay what the sellers are asking for their price. And that's just kind of like a hard thing to deal with if you're a buyer. But just know that it's still there. However, look at the exuberance of 22 in this orange line here. It's not quite where that was. And you can see in 24 and 25, 24 is in the silver line here. The red line is 25. It's settling down a little bit. So I expect this curve to kind of continue to come down more towards the 100% line, and maybe in the next year or two, we might see it dip below. We're going to check in on average people are actually having to negotiate off their asking price, which again is a normal and helpful mortgage group into the conversation here. We're going to check in. And Amy, go ahead and unmute your mic, and I'll leave off here. I'm going to stop screen share in a minute, but here's a quick look at rates right now. And Amy, go ahead and unmute your mic, and I'll leave off here. I'm going to stop screen share in a minute, but here's a quick look at rates right now. 30-year fixed rate averages over the last, what is this? Basically month here. All right. Looks like we're going, no, I'm sorry. This is a 1-year look back here. And you can see kind of where we're at is roughly 6.25 to 6.35. And the sweet spot that I've been trying to look for is for rates to consistently be below 6%, because I feel like that's going to unlock a lot of transactions that'll take place, but we're not quite there. So Amy, I'll hand it off to you. I'm going to stop screen share and we'll go to you. Welcome.
So hi everyone. Jeff, that's always such awesome information that you share. Very interesting as well. The good news here today is rates are still in the low sixes. So even though we're looking for maybe them to break down just by the 5 level to create a little more inventory, we're in a really good place. Low sixes. The Fed did cut rates a 1/4 basis point on a couple weeks ago, and since then they really haven't changed, mainly because that move by the Fed was already priced into the markets. So not much movement on the interest rates right now, with the government shutdown. Right now, everything's in a holding pattern, not directly affecting Fannie and Freddie at all. They're quasi-governmental entities, so all loans are still moving forward. Even FHA, yes, there was cutbacks with people, but the loans are still moving through the pipeline. So we just have to, be positive, have a hope and faith in our government that they'll figure this excessive spending situation out, so that we'll all, our economy can be in a better place. Any questions? Anything?
Hope and faith in our government. I like that line. We need to have a lot of hope and a lot of faith.
Well, you gotta have hope, and it's not the worst thing, a government shutdown. It means that they're really, trying to figure it out. So
I agree wholeheartedly with that. And I guess that's what I was trying to say. And I'm glad that you said it, because that's kind of the point that I was trying to make is, big deal, the government shut down for a week. Like, we've got to solve bigger issues, because we can't just continue to kick the can and raise the debt ceiling. It just it's not going to work. At some point, we're going to have to realize the situation that we're in. So why not try to address it now and rip off the Band-Aid on at least a few issues, so we're not going to get into it. I don't really care to get involved in politics, quite frankly. But anyway, thanks for the information, Amy. One thing I just wanted to show before we part ways here is I extended out the 30-year fixed to the maximum that this chart allows, just to, again, have some historical perspective, right? Like, rates are actually really good, historically speaking, right now, 6.5. It's just for those that locked in to a rate at 2.5 or 3%, 4 or 5 years ago, 6.5 is not a great rate for them, but for everybody else on planet Earth, it's a pretty good rate. And when you look at it historically speaking, going back to 2008, which was the year that the great real estate recession began, and then rates started to drop because the market just completely fell apart. The moral of the story is that owning a home before 2008, 6% was, and if you have the ability interest rate for decades, you should.
The moral of the story is that owning a home is still far better than renting.
Pursue it,
and if you have the ability to go out and buy a home, you should.
All right, Amy,
there's a
anything
lot
else
of great wealth building opportunities that owning a home brings to you, and you should pursue it because it's a great thing for you and your family. All right, Amy, anything else you want to tackle?
No.
We have 2 questions. Yeah,
okay.
we have 2
Couple questions from the group. Go ahead.
Carol, you want to go?
No, I was Vanessa.
Oh,
The
you were doing it
question.
for Vanessa.
Yeah.
Okay, Vanessa, go ahead.
Hi, Amy. I think you might have gotten at my question, but the one concern I have is what's happening with VA loans in light of the government shutdown, and is it a good, do we expect to see delays in having those loans processed, or what would you advise your clients if they were thinking about this type of loan and doing a timely transaction?
So, good question. I would, it's a tough question. They are being processed. It's slower, right? I would hold off on locking, that's for sure, because of the slowness of it. And if you can't make your lock date, then you get into a situation where you have to pay lock extension fees. But they're still processing them. So, and VA is a great loan. They should, if they have that, if a vet can use that, they should be able to take advantage of that VA loan.
Thank you. Thank you so much.
All right, that's it. Anybody else?
Nope.
No. All right, that wraps it up. Thanks,
All right.
everybody.
Thank
Thank you. We'll see you.